Okay, good morning, everyone. So it is the 13th of April. It is Wednesday morning here in Singapore. So what we're looking at today being a Wednesday, we are looking at the pound in focus. So on Wednesdays, we're looking at pound in focus. We'll be looking at the dollar index as well. With the pound, I'll also do a quick review of the euro pound. And for today, we just had 1 hour ago, we just had the Reserve Bank of New Zealand increased interest rates. They were expected to increase by 25 basis points. What they did was they increased by 50 basis points. So I'll go through some key points to pay attention to with that decision and also the impact we've seen on the New Zealand dollar with that news, the RBNZ increasing rates by 50 basis points, surprising the markets with quite an aggressive stance on action there. Right. So if you are watching us on YouTube, this is recorded live for Traders Club members. If you're not a Traders Club member already, just make sure you check out the links below and join us in the Traders Club. You get this live. If you're watching this on YouTube, this is recorded and uploaded and released at a later time today. So with that said, let's do the quick disclaimer again. Any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of myself. So please remember to do your own analysis prior to entering any trades. Right, so going straight to the news here on Forex Factory, we're just looking at 10 a.m. We saw the RBNZ, just doing a quick review. RBNZ official cash rate went from a 1%, was expected at a 0.25% increase. What happened was they increased it by a 0.5%. So current cash rate now for New Zealand is at 1.5%, right? And if you clicked into the rate statement here, clicked into the latest release, what we have here is the rate statements for from the RBNZ. Monetary tightening brought forward, right? So there was a key headline. They, instead of taking their time with a 25 basis point, they brought it forward. They increased it by 50 basis point. And I highlighted the main things to pay attention to is that the Reserve Bank's core inflation measures are at or above 3% right now. So Traders Club members as well, I mean, slight digression, Traders Club members, I've put all this into the platform as well with a bit of more explanation, so you can check that out in the individual chat sections or the individual currency sections there. So the Reserve Bank's inflation currently is at or above 3%, right? And then as you scroll through all that, you can read through that. The next thing to pay attention to is that members note that annual CPI is expected to peak around 7% in the first half of 2022, right? So it's at 3% now. They're looking at CPI now going to 7%. They're looking at quite significant increase in terms of the CPI, in terms of inflation coming from the, in New Zealand. And also that inflation is above target and employment is above its maximum sustainable level. This is actually quite concerning because as you have very high inflation numbers, as you have very high inflation numbers and very high employment numbers, what that could actually lead to is a scenario of stagflation. We've gone through a bit more details of stagflation in the club. There was explanation about stagflation. What this could end up becoming is that we see high cost of living, which is inflation, and then high employment, which actually just keeps pushing everything towards the upside. Then it's going to be very hard for the Reserve Bank or the central bank to actually bring down inflation, to actually try and control cost of living, because all their policies are going to have a very limited effect on the overall economy there in a stagflation scenario. So that's also the reason why the Reserve Bank came to the point of agreeing for a 50 basis point increase consistent with the least regrets analysis, right? So least regrets analysis is, where was it? There you go. Agreed for the path of least regret to increase OCR now, more now, rather than later, to head off inflation expectations and to minimize volatility, right? So they're trying to do a 50 basis points to bring down inflation, just so that inflation slows down while having a good employment level or good employment data there. So you don't have it, you avoid, they're trying to avoid a stagflation scenario by bringing down inflation while employment is still quite healthy or still doing quite well. So putting that together, that's why they did a 50 basis points rate increase for the from the RBNZ. What actually happened is slightly counterintuitive here on the New Zealand dollar. I'll show you this on the H1 time frame. No, actually, I'll show you this on the M15 time frame. With the news release at 10 o'clock, what we saw was that big push towards the upside. So that news released here at 10 o'clock, we saw the push by 30 pips from a 6867 all the way to 6902 or 6900 or 6900, and then it came all the way back down. So that first push was because of, you know, a 50 basis point increase. We saw that big jump up, but then looking at the statement, looking at the details of the statement, what they're actually doing is they're trying to avoid stagflation. They're trying to, you know, look like they're increasing rates, and there's no talk about any further rate increases. They haven't given any projections or forward guidance about what they could be looking to do into the future. The main thing is that, you know, they're looking at further inflation looking to climb higher, employment looking at this very high point, whether it's sustainable or not. So it's a bit, you know, positive yet not so positive, slightly negative. That's why we saw over the next few candles, we see the Kiwi dollar coming back down, possibly to test that 6842 support level again. So coming back to that, we saw that coming back down. At this point, one reason, if you jumped into the news, we've been talking about this last night with our Traders Club members, that we were looking for it to break from bounce off that 6842 level towards the upside. Traders Club members, if you jumped into that trade, fantastic. If you didn't, then too late to enter any buying opportunities now. What I would say is wait for it. Let's see whether it will bounce off this support level towards the upside for the Kiwi dollar. So you can see that on the H1 time frame. With this candle, based on the price action, it looks very unlikely that we're going to see further upside. What you need to see now is the reaction at this candle or the reaction at this support level to see any buying opportunities. If not, then, you know, the news has happened. It's already moved on. You missed a trade. It's okay. Let's look at the next possible trade ideas from this point on. So that's New Zealand dollar price movements. RBNZ increased rates by 50 basis points. Didn't have the big impact that they expected, but it still has time to play out. With that said, looking at the dollar index here, dollar index on H4 time frame, dropping slightly now from a 100.33 level, right? Retracing back down. We were talking about this yesterday. I was anticipating that reaction at this 100 level. I didn't think it'll go all the way to 100.97. We were anticipating that 100.20 and 100.30 level before retracing. So it's moving somewhat as we expected. I'm looking for it to retrace slightly before possibly bouncing back up with the news, with any news about FOMC rates increase to be released, right? So another thing to pay attention to, again, jumping back to Forex Factory, was last night. We saw the US CPI data released at 1.2%. The annual CPI went to 8.5% from a 7.9%. So very high, multi-year high, historic high inflation numbers now. We see from the US, and with that, we also saw that, you know, news coming from FOMC members that rates, they should move rates rapidly to neutral range, and further tightening. So all of that commentaries are likely to push the FOMC to further rate increases or more aggressive rate increases like what we've just seen from the RBNZ. So looking right now, some retracements on the dollar index, but I think that as we see further comments, we're going to see the dollar push back up again towards that 100.30 and possibly even that 100.45 or 50 level. So slight retrace now, looking at further upside again. But the focus is on the pound dollar today. So let's look again back to the news. What could happen for the pound dollar today? 2 p.m. GMT +8. We do have that big news coming from the UK. CPI year on year was 6.2%, expected 6.7%. I'll show you what happened over the last couple of months. We've seen, just last month, we've seen CPI go from a 5.5, expected 6 came out at 6.2. So beating expectations, a lot higher than previous. In Feb, we saw 5.4, expected to stay at 5.4, came out at 5.5. Jan, we saw 5.1, expected 5.2, came out at 5.4. So what you notice here is that, inflation year on year from the UK has been pretty much upward climb since November last year, beating estimates, climbing pretty much straight line towards upside. Right now at 6.2, expected 6.7. We might even see a 7%, but I think it would be just shy of 7%, maybe a 6.8 or 6.9% in terms of the CPI year on year to be released later at 2 p.m. Again, the Bank of England has been increasing rates. This inflation at 6.7, 6.9, I'm thinking 6.9% could push the Bank of England into further rate increases. But what they have actually been doing, they have actually been quite quick to increase rates already. So I think that if this does come out at anywhere from 6.7 to 6.9, we're possibly going to see some pound dollar strength being applied, as it might try and force the Bank of England into further rate increases again, or to continue its further rate increases, or to push for bigger rate increase, a more aggressive rate increase, right? So looking at the pound dollar here, what that could mean is quite a straightforward trade idea. I like how the pound dollar has been testing and retesting that 1.3 support level, right? You've seen that test here in early April, again on the 11th of April, and then most recently is tried to break lower but bounce back up again. So at this 1.3 level, very key level, we're looking at whether the pound dollar can bounce back up from this point. With that trade idea, or with that news release and a following trade idea, what I would be looking for is at 2 p.m. If it stays above this 1.3 level, what you could be looking for is a buying opportunity, let's say at about 1.3020, a little bit more conservative there, 1.3020. Could be looking at almost 40 pips take profit, a stop loss of about 20 pips. You're looking at almost a 1:1 risk reward towards the upside. If you wanted to push a little bit higher, I think that would be a little bit too aggressive. I think trade it up towards that 1.3060 level. Then if we do see that move continue towards the upside, you could be looking for another trade breaking above 1.3060 towards that 1.31 resistance level again. So this could be a two-part trade. You could be looking to buy it up as it breaks above with a good news coming from the UK, and then after that another trade back up again from that towards that 1.31 level. You can see here that why I'll be quite keen on a two-part trade is back in March we saw that move hit that 1.3060 level, retrace before going back up towards that 1.31. So I'm looking for a possible repeat of what happened here, right? What happened here in March could be applied here as well. Move up towards that resistance, sit there, retrace slightly before moving up again towards that 1.31 level. So quite straightforward for the pound dollar, especially with if we do see the CPI numbers move accordingly. So with that, another trade idea is also the euro pound. Yesterday, we were just talking about euro pound breaking that 0.8351 level to move lower. Right now, it's retracing slightly, primarily driven because of the euro dollar moving. I'll show you the euro dollar here. You can see euro dollar bouncing back up a little bit. So that's possibly one reason why we see the euro pound moving up again. But if we do see the pound dollar push higher, pound dollar does have an inverse relationship with the euro pound. We're likely to see that right now pushing a little bit higher and then turning back down again. So if you missed that first trade, that first move towards the downside as it broke that 8350 level, what you could be looking for again for the euro pound is for it to move up and then to resist that level, look for that selling opportunity back down again. So euro pound trade idea from yesterday is still valid, another chance to get into a trade. At this point, we have multiple trade ideas on the pound dollar with the news release, on the euro pound for a refire in terms of what we spoke about yesterday. Make sure you trade well, trade safe. I'll be stalking the Kiwi dollar, looking for possibly, what's going to happen at that support level, whether there's any buying opportunities. I'll be firing out some signals if that does happen. With that, take care, trade safe, trade well. I'll see you tomorrow for the yen pairs and gold. Bye-bye now.